The local market closing about just under 0.2% in the positive this afternoon. Good showing from the heavyweights Naspers and Prosus, with the miners in the positive as well. Brian Thomas is from Laurium Capital. He joins us now for some insight. I mean, look, Brian, good afternoon. We've been speaking about Eskom. We've been speaking about the country's energy crisis. The local market's still in the positive. And presumably this is because most of the shares are heavy weighted, 60 to 70% overseas. The market, at least at this stage, not really affected negatively by this tremendously severe power cuts we're having at the moment.
Yes, we've actually got a very fortunate market in a lot of ways in South Africa. As you allude to, there are a number of companies that just happen to be listed on the JSE, but don't necessarily dance to the heartbeat of what's going on in South Africa. And with that diversity, the overall market ends up being up. But there are pockets of weakness in the market that are driven by the load shedding. I actually spent most of the day today with Mr. Price management team visiting stores, and went around a number of the malls and looked at what was going on during load shedding. And it really impacts these guys significantly when you get into levels 5 and 6. 3 and 4, I think we're all kind of used to, but some of the businesses really get to struggle in the higher levels of load shedding that we're in at the moment, 5 and 6.
And then related to load shedding, coal, I just want to point out to one company, a lot of people were buying Tangela Resources shares, and for good reason. I mean, that share price really going up. Took a bit of a dip recently with Transnet issues and so forth. But I see, here we go, this company is saying that, look, it's going to have double-digit profits soon. And I'm just wondering, what did you make of that trading update from Tangela?
It's been a phenomenal story, Tangela, ever since it listed. I think it listed in June of last year. And it traded, I think, if I remember, about 17 Rand on the day. And it's gone up 15 times since then. So it's been a huge success story. There has been some luck involved in it, in that the coal prices has skyrocketed since the Ukraine invasion, just being connected to the whole energy complex. So if you look at coal prices, they averaged so far this year $276 a ton versus $124 last year. And Tangela's realized coal price that they've been able to sell at over the course of this year is $236, a significant increase on $103 from last year. So it's been a very good sweet spot for Tangela. If you look at Tangela, just share price appreciation this year, it's up 270%. If you add in the 60 Rand dividend that they declared a couple of months ago, that takes it to nearly a 325% return. Now, I would caution people that this is a cyclical business. Coal prices can go up and then they can also go down. So, yes, they'll do very well this year. The jury's out as to just how firm the coal price will remain into next year.
And then, listen, what do you make of what's been happening with SPAR of late? I mean, in the news for all the wrong reasons. We've got some accounting issues in the media today about the SPAR retailer. They're also facing some court action from franchisees. Again, possibly at one stage a very good share. It's got potential, but news not exactly going in their favor this week.
Yeah, I mean, SPAR's a good business. They operate a franchise model. So when you attend your local SPAR, generally the person that you are dealing with there owns a SPAR franchise, and he's supplied by SPAR, the central company, with the goods that he or she puts on their shelves at the SPAR that you attend. And from time to time, they make loans to these SPARs to keep them going. In times of COVID and pre-COVID, they make loans. There have been some allegations, fairly complicated allegations, around how they've accounted for those loans over time. Look, I don't think it's a massive issue, that particular accounting issue. And then I see, as you say, that there's a court case that's been brought against them, or a case that's been raised against them by AfriForum and one of the families that runs, I think, 45 SPARs for them. It would be disingenuous for me to comment on that. I mean, that's obviously going to be dealt through the legal proceedings. I don't particularly have a view as to who's in the right or who's in the wrong. We'll let the South African legal system, which really seems to be working, deal with that in due course.
Yep. Then just finally, as I'll let you go, Brian, I mean, what did you make of an Absa update today. I mean, look, they look like their numbers are going to be favourable when they do release soon. But it is saying that, look, we've got to watch out for what is called impairments, the ability for consumers to actually pay back their loans. And they reckon, look, they're a bit nervous about that. That's not looking too good. But I would imagine that just given the tight economic environment, we can expect people to find paying back their loans somewhat more difficult to do.
Yes, that's exactly right. They are indicating that the impairments, so the charges that they'll take to their income statement for people that don't or unable to repay their loans, those are ticking up to the higher end of a guided range. They guided a range of 0.75% to 1% of their book, and they're just saying it will be slightly higher than they had initially anticipated. But on the positive side, their revenue is growing faster than their costs. And that's what you always want in a business. Revenue grows faster than cost means that you're making money. In our game, we call it positive jaws, and that's what Absa is generating. So a good result from Absa. They're managing the business pretty well through this testy time.
All right. Brian Thomas from Laurium Capital, thanks very much indeed for talking to us.